नको बिरू गंगलात चालणे माझ्या संगे जागा देते बंगल्यात.
Hey folks, CA Rachana Ranade here and I welcome you all to another interesting IPO review of Adani Wilmar. And this time we did a different exercise. I had done some polls on Instagram and Twitter and these were the results of the poll. And because you all said that yes, we would want to know about this company in detail, and I thought your wish is my command, and that's why I'm coming up with this IPO analysis. But then my wish is also your command. So you have to smash that like button. Wow, local झालं ना वाला. Okay, anyways, chalo. So what are we going to discuss in this video? We are going to talk about number one, what does the company do? Followed by the industry analysis. Then we will talk about the financials. We'll talk about the valuation. We'll talk about the peer comparison, certain risks and litigations, strengths, and IPO details. Now let's try and understand what does the company do. And the company Adani Wilmar is an FMCG company offering most of the kitchen commodities for Indian consumers. As the name suggests, Adani Wilmar, it's a 50-50 JV. Everyone has heard about Adani Group and it's a multinational diversified business group based out of what? Obviously India. What is about Wilmar Group? Wilmar Group is Asia's leading agribusiness groups but which is based out of Singapore. Right? Now, let's try and understand with these two groups coming together, is there any synergy benefit created or not? So basically, Wilmar Group brings sourcing capabilities and technical know-hows. Okay, so you can imagine from the procurement side, Wilmar Group has a lot of strength. But once after procurement is done, production is done, then what kind of expertise is required? For that, Adani Group brings in the local market expertise, advanced logistics, experience in trading, and that is why I'm saying that these two groups coming together is getting a lot of synergy benefits, right? Now let's try and understand what are the three major categories in which this company operates. The very first category is the edible oils category, and if you see this figure, you can understand that 65% of their business, I'm talking about sales volume wise, is contributed by edible oils, industry essentials 25%, and food and FMCG is contributing to 11%. But I'm sure you might be interested to know that if I'm talking about edible oils, what all things are included in this segment. If I'm talking about edible oils, it's about more of soya, palm, sunflower, mustard. All these will be coming under what? Under edible oils. And I'm sure that you might be aware that company's flagship brand is Fortune and it is the largest selling edible oil brand in India. If I move ahead with the second category is about food and FMCG, which is contributing to almost 11%. Again, I'm repeating sales volume wise. Now, what all things are included in this? You can see here again in the chart, wheat flour, rice, pulses beans, soya nuggets, all these are into this food and FMCG category. Remember what happened in the pre-bumper of the video. So, olden days, first used to go to the grocer, bring the wheat, then आता निवडण्याला काय म्हणतात मला माहित नाही, whatever, sort it, take out all the stones, right? Then sieve it, I guess that is the correct word, चाळणे, right? And then पाखडणे, okay, what not, I don't know all the English equivalents, guys, understand my emotions, right? And then we used to go get it, we used to grind that, and then finally the atta used to be ready. But now, with the help of all these online portals, we can just quickly order that, and that's what happened in the pre-bumper, right? So wheat flour, rice, pulses, bases, all these are what? Coming under the food and FMCG category. So the company's Fortune brand again ranks second and third in India in packaged wheat flour and basmati rice respectively. In fact, company is among the top 5 fastest packaged food companies in India based on the growth in revenues during the last 5 years. By the way, many people also ask me, ma'am, where do you get all this information? Of course, I've taken all this information from the RHP of the company, which is the red herring prospectus, right? Followed by the last one, it is about industry essentials. And in industry essentials, you have castor, oleo. And if I'm talking about industry essentials, company is the largest manufacturer of stearic acid and glycerin in India. Okay, I'm going to talk about that a little bit more in the coming section itself. So if I go ahead with the manufacturing facilities now, okay, so all in all, I hope you have understood the three major lines of the business. Which are the three major lines? Edible oil, packaged food FMCG, and industry essentials, right? But for this you need good manufacturing facilities, large number of manufacturing facilities, wherein company has 22 plants across 10 states, and these 10 plants comprise crushing units, plants comprise of 10 crushing units and 19 refineries as well. Okay, company's refinery in Mundra is the largest single location refinery in India with a design capacity of 5,000 metric ton per day. That's a huge capacity, right? So currently company has a lot of integrated manufacturing infrastructure facilities, wherein number one, I'm going to talk about backward and forward integration. Just to simplify this process, you can understand that their manufacturing plant have crushing units, and their manufacturing plants also have refinery units, right? So what happens? From this crushing units, the company is able to take out de-oiled cakes, and from refineries they take out palm stearine and palm oil. Okay, now with these they manufacture what? Oleochemical products, and with these oleochemical products they're able to manufacture products like stearic acid, glycerin, and if I'm talking about the FMCG applications, soap and hand wash, right? So I hope this was a little bit more to digest. If you want, you can again rewind and revisit this part, but I hope all in all you have understood about backward and forward integration. Also, one last point, company is currently operating at roughly 50% of their installed capacity. Well, going ahead with the industry analysis, India's domestic consumption grew at 11.1% CAGR between financial years 14 to 19, whereas USA and China grew at 4.3% and 8.2% respectively. So our domestic consumption has been much higher than these two countries. But if I'm talking about annual per capita spent on the categories of packaged foods in India, on an average, per capita spend was just 4,650 rupees on what? Packaged food spend category, which is very less as compared to China, an equivalent of 16,000 INR, and USA at an equivalent of 1,12,500 INR, right? In fact, it is believed that the packaged food is set to gear up at higher levels. Why? Because of the concerns and limitations in movement due to COVID-19, and also people feel that acha packaged food it will be more safe. So maybe the trend can grow in this favor in India as well. Now, if I'm talking about packaged food retail category, let me just focus on the packaged staples, that is edible oil right now. If you see here, the market size has grown from financial year 15 to financial year 20 at a 7% CAGR, and it is expected to grow at 6.6% CAGR. Not bad. In fact, this category generally grows at this rate only. So nothing too good, nothing too bad. Stable, above average, I can say. Then if I'm talking about the presence of large FMCG food companies across kitchen essential commodities. So if you remember, is Adani Wilmar general FMCG company? No, FMCG company with focus on what? Essential kitchen commodities. So here you can see what all things come up under this category. It's edible oils, wheat flour, rice, pulses, sugar, and dairy, fresh packaged. So you can see amongst its peers, only Adani Wilmar, you can see tick mark in 5 categories out of 6 categories. So again has a good competitive edge. And if I'm talking about the overall financial performance 2019, 20 and 21, from the edible oil business, their revenues contributed to 74.8%, 79.16% and 82.23% respectively. So I hope you're understanding how important is the edible oil category for this specific business as well. So if I move on, the overall market size of this edible oils is almost 1,79,500 crores. But out of this, the largest chunk is again by whom? Adani Wilmar at 17%. You will be like, what is this 60%? 60% is others. All chotu brands, it could be local brands, all this put together is 60%. But one single largest is again Adani, and see the second largest, that's at 8%. So this is more than double. Now if I go to edible oil, zoom into it further, what all comes under edible oil? Under edible oil, you have palm oil, soybean oil, mustard oil, a lot of things. And out of this, if you see, amongst its peers, Adani Wilmar is present in all the categories. So again, that's a edge that they are having over their competitors. Now if I'm talking about the overall India's per capita consumption in edible oil, it's estimated to be 16 to 70 kgs per annum, again which is comparatively lower as compared to the world average of almost 24 kgs per annum. Now, if I'm comparing this with Pakistan, Bangladesh and China, still it's 19, 19 and 21.5 kgs. And believe it or not, in the Western world, this has an average of 40 kilograms per person per annum. As per a report that I read again, it mentioned that in the refined oil in consumer packs category, their market share of branded edible oils was at 18.3% at 31st March 2021. Now let's start with the financials. If you can see, revenue from operations has gone up from 287,000 million rupees to 370,000 million rupees. Of course, I'm rounding off the figures, right? The CAGR of revenue is coming to almost 8.8%. If you see, even EBITDA is positive with a CAGR of almost 4.5% and CAGR of PBT is 10.07%. If I go on to the final figure in the P&L, you can see the restated profit for the year has gone up from 3,755 million rupees to 7,276 million rupees with a CAGR of, PAT CAGR of 24.67%. Wow, feels good to read PAT positive figure, and that too with a nice CAGR, right? Now, if I move ahead with the balance sheet, nothing great, nothing to be discussed in the asset side. But if I go on to the liability side, equity and liabilities, you can see other equity, that is nothing but reserves and surplus, that is going continuously in the upward trajectory from 19,967 million to 31,838 millions. There are certain borrowings in the company, but we are also going to talk about the debt to equity ratio, which is absolutely in an okay zone. Plus, the IPO proceeds are also going to lower that down further. Now, if I move ahead with the cash flow statement, you can see I'm mainly going to focus only on operating activities. It is positive, very much in positive. You can see that there has been a drop, but that is mainly because of changes in inventory, nothing worrying as such. Going ahead with the ratio analysis, you can see that their debt to equity ratio, which I was just talking about, is at a decent enough level of 0.54. Current ratio is greater than 1. EBITDA is also decent enough. PBT numbers, PAT, all in all okay. ROE and ROCE both are in double digit. ROE latest figures 22.06% and ROC is 14.54%. Good one. One point which is about asset turnover. You can see asset turnover is good for the company at 9.31. So basically, higher the asset turnover, it means that more and more they are investing into PPE, that is property, plant and equipment. Higher revenue will they be able to generate for the company. Let's move ahead with the valuation. If you're checking the PE, at the lower price band, PE is coming to 42.99 and at the higher price band, it's coming to 45.36. How is it as compared to the industry? Industry highest PE is at 89.73, average 66.31 and lowest is also 46.79. So if you see, their PE is lower than the lowest in the industry average. So if I compare their PE with the peers as well, here you can see very clearly lowest is of whom is of Britannia Industries at 46.79 and their PE is lower than that. So I believe as per the PE valuation metrics is concerned, this one does show that yes, it is kind of undervalued and seems that there is some margin left for listing gains. If I'm talking about the next one, which is EPS, you can see that EPS is the lowest as compared to their peers. The second largest is also somewhere around 9.08, which is Marico. Their EPS is 6.37, basic EPS. If I'm talking about their net worth, you can see net worth is 22.06% and this is, I guess, the fourth largest as compared to the peers. If I'm going ahead with the NAV is also 28.86, lowest from the second. So again, not a huge one though, but I hope you have understood all the various parameters that we have discussed. PB, that is nothing but price to book value, is again at 6.82 at a lower band and 7.19 at a higher band. But if I'm comparing some other parameters with their peers, you can see if I'm talking about revenue from operations, Adani Wilmar is at the third slot. If I'm comparing it with ITC, which is at number 1, HUL at number 2. If I'm talking about revenue CAGR, their revenue CAGR is highest at 11.3 as compared to Nestle, Britannia, HUL, ITC as well. And if I'm talking about EBITDA CAGR, they are again at the second position now with 20.7% of EBITDA CAGR. The very first risk that we should discuss is the unfavorable local and global weather patterns, because of which it can have an adverse impact on the availability of raw material. The second one is that if there is a delayed shipment in the imported crude edible oil, then of course their manufacturing can get hampered. Of course, increased in transport cost is also one risk which the business is involved with, because more and more transport costs, that will have a higher impact on the production cost as well, and in turn their margins can squeeze in further. Last one is about the regulatory, legal and other proceedings against the promoters, promoter group companies. We're going to check that out one by one in detail now. The very first one you can see on the screen is about litigations involving their company. Of course, I'm not going to read out all the litigations, but you can see there are again two subparts here: litigations against the company and litigations by our company. Here you can see a lot of outstanding cases. Of course, amounts involved are also decent enough. You can see here the amounts are also in rupees millions. So if you want, you can pause the screen, read through this and then go ahead. If you see litigations involving against their directors, again you have certain litigations. Then you see litigations involving their promoters. In that you have again 2 points: litigations against their promoters and litigations by their promoters. So you can see again two subparts here. And the last one that we are going to discuss is about the indirect taxes one. Again, there is a litigation, and final is litigations litigations involving their subsidiaries, and these are the litigations by their subsidiaries, where again you have direct tax and indirect tax. So I believe that whenever you are applying for the company, of course, as we are discussing in this case, they are number one in many facets. They do have a lot of strengths, but we can't just look only at the good points, right? You also have to understand what are the risks, litigations, and after understanding financials and all other valuation parameters, then take a final call whether you're going to invest in this or not. Well, now that we have understood the risks and litigations in detail, now also let's have a quick recap of all their strengths. Their brand fortune, as we discussed, has a very strong brand recall value. Second important strength is that they have a leadership in branded edible oil and packaged food business in India. Also, they are one of the fastest growing food FMCG. They also have a very strong parentage. If you remember, we talked about the mega business behind this JV of Adani and Wilmar Group, where Wilmar International is the largest palm oil supplier in the world. And because of this, what happens is that they get an additional competitive edge in enabling mitigation of price risk. And if I'm talking about Wilmar, which is the largest edible crude oil importer in India, it gives a good bargaining power for better quality of raw materials. If I'm talking about the distribution network, company is the largest distribution network amongst the branded edible oil companies in India. And as per the IMRB report, the company was present in 1 out of 3 households, and they were catering to 1.6 million retail outlets. Moving ahead with the IPO details, the issue opens on 27th of January, closes on 31st of January. If you see that the share is going to be listed on BSE as well as NSE, there's going to be an employee discount for that as well. The IPO's listing date is at 8th of February 2022. Minimum investment is 14,950, and of course RII category highest is 1,94,350. If you've read about this company, they had originally planned their IPO size at 4,500 crore rupees, which they've taken down to 3,600 crore rupees. So when I was wondering that why is there a reduction in the IPO size, I read that the company felt that there is no need to allocate a huge chunk for the general corporate purpose, and that is the reason why they have reduced this size. By the way, SEBI also allows such a reduction of almost up to 20% in the IPO size when after the DRHP is filed, but before the RHP is filed. So moving ahead, what are the objectives of the IPO? Very important. It is not an OFS. It's a 100% fresh issue. So whatever funding they are going to get, they are going to utilize it for capital expenditure. You can check out the table wherein you will understand how much allocation is for what purpose. They're also going to do some repayment and prepayment of the borrowings. Also going to use it for funding the strategic acquisitions and investments for the company. Well, I hope you have understood about the company in detail. But the big question, am I going to apply or not? For that, don't forget to check out the live session on 31st at 11 a.m. And if you also want to know more about how to analyze the IPOs, you can click here. And if you want to know about the IPO hits and misses of 2021, you can click here. Till then, take care. Jai Hind and bye-bye.